Good morning and welcome to the RBG Holdings PLC full year results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged, can be submitted at any time via the Q&A tab situated in the right-hand corner of your screen. Just click Q&A, scroll to the bottom, type your question and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company review all questions submitted today and publish responses where appropriate to do so. Before we begin, we'd like to submit the following poll. I'd like to hand you over to John Divers, CEO. Good morning.
Thank you very much, Paul. Good morning, everybody. Very warm welcome from me. I'm John Divers. I'm the CEO for RBG Holdings PLC.
And I'm Suzanne Drake-Lewis, and I'm the Group Finance Director.
We're talking to you from Fleet Street this morning, where we're going to run you through the RBG Holdings PLC audited accounts to the end of December 2022, showing good, strong growth in all the financial metrics that we monitor since IPO. In terms of what we're going to do this morning, we've got about 25, 26 slides, I think. Should be no more than half an hour, giving you plenty of time at the end for some Q&A. Initially, I'm going to run us through who we are, what we do, and a few headline numbers. Suzanne is then going to run through some of the numbers in a bit more detail. And finally, to finish off, something from both of us around the strategy, what we're going to look to do for the rest of 2023 and beyond. So as I said already, my name's John Divers. I've been the CEO of RBG Holdings since March of this year. Suzanne joined the board on the 31st of December last year, and joining me on the exec in March of this year were Nick Davis and Tanya McLeod. So that makes four of us who are the executive for RBG Holdings PLC. Now, whilst it's a fairly new executive team for the company, there's a considerable amount of experience, knowledge and history, both within the legal services side and the wider industrial marketplace. I won't embarrass people by telling everyone how long we've all been working. Joining us are the non-execs, headed up by our chairman, Keith Hamill, and the non-exec directors, Marion Ismail, Patsy Baker, and David Wilkinson. And the eight of us are very much the custodians of this business and the ones who are going to steer it over the coming months and years. So what is that business? That business is RBG Holdings PLC. We are a legal and a professional services group. It's comprised currently of three different companies. We have RBG Legal Services, which comprises two law firms based here in Fleet Street in London, namely Rosenblatt and Memory Crystal. We split that into contentious work for Rosenblatt and non-contentious for Memory Crystal, crudely split between real estate and corporate work. A little bit of the background here. Rosenblatt was started in 1989. Memory Crystal was started in 1978. In 2018, Rosenblatt floated on the AIM market here in London, and in 2021 acquired Memory Crystal. Up in Manchester, we have Convex Capital, which is a boutique sell-side only M&A business looking to help entrepreneurs sell their businesses. And finally, we have Lionfish Litigation Finance. The reason it's down there in the bottom right is that last year the decision was made to sell Lionfish by the board, and I'll tell you a little bit more about all of those three businesses in some future slides. So in terms of the headline numbers, if you look at the top row there, running from left to right, we saw group revenue, including gains on litigation assets, increase by 25%.
Ladies and gentlemen, do bear with me. We've just lost connection with the room. I'll just try and bring the team back in now. Bear with me 1 second.
I can confirm a further dividend of 0.5 pence. It says final dividend there. These slides, so slight mistake there. It's a further dividend, not a final dividend of 0.5p. It's important to stress that fact. That is half of the dividend from the previous year. And when you look along the bottom, it adds some weight and explanation into why that's the case. Not all areas of our business performed in 2022 as we would like. You can see that the profit after tax on the continuing operations namely being the legal services in Rosenblatt and Memory Crystal and Convex up in Manchester. But Lionfish lost £4 million. That gives us a retained profit of 3.8 million for the year. Adjusted free cash flow was 4 million, down from 6.4, and net debt at 19.2 million. Dividends are essential for shareholder confidence and shareholder value, and we'd all like the 2.5p and the 0.5p that we're just announcing to be higher. However, back in 2018, at the time of the IPO, it was announced that we would ideally like to share 60% of retained earnings with shareholders. The 2.5p paid in 2022 from the 3.8 million of retained profit after factoring in the Lionfish losses mean that that's actually 62%. So we have achieved the stated aim for 2022. However, what's important to remember is this is now a business that is substantially larger and far more profitable than it was at that time of IPO. And I think that reflects the success of the acquisitions. If you look on the left-hand side, you can see our revenue, including gains on lit sales, going from 12.5 million up through acquiring Convex and then Memory Crystal to 54.1 million. And correspondingly, on the right-hand side, you can see EBITDA go from 3.3 million, a blip at 2020, when Convex was affected by COVID, increasing to 14.6 million. Figures that we're very pleased and very proud of. So that's it from me for the time being. I'm now going to hand over to Suzanne, who's going to take you through the financials in some more detail.
Good morning, everyone. Although I'm a new face in front of you this morning, I've been with RBG since the 4th of January 2019, when I arrived just in time to prepare the first set of financial statements for the 8 months following the IPO. And so I've seen at first hand how the group has grown and how the group has worked through the challenges that have been posed by the pandemic and uncertain economic conditions, and been profitable and cash generative in every year. If we have a look now at the results for 2022, following the decision made by the board in 2022 to divest of Lionfish, under IFRS accounting rules, Lionfish has been classified as a discontinued operation. As John has described in his summary, the continuing operations, which are made up of the core legal and professional services businesses, have delivered excellent results in 2022. You can see on the slide that revenue is up by 8.3 million, or 19.8%, from 42 million up to 50.3 million, and gains on litigation assets also increased by 2.7 million, from 1.1 million to 3.8 million, which gave us a total increase in total revenue, including gains on litigation assets, up from 43.1 million to 54.1 million, an increase of 11 million, or 25.6%. The legal services business in 2022 benefited from its balanced offering across both contentious and non-contentious matters, and John is going to describe this in more detail later. Convex, however, suffered in the economic uncertainty in the latter part of 2022, with anticipated deals deferred. The increase in total revenue of 11 million fed through into an increase in adjusted EBITDA of 5.5 million, or 54%. And adjusted EBITDA increased from 10.3 million in 2021 up to 15.8 million in 2022. This increase, though, also reflected the group's strong commercial management, as a percentage of revenue, EBITDA increased by 5%, up from 24% in 2021 to 29% of revenue in 2022. In 2022, we incurred non-underlying costs of 1.2 million. around 400,000 of abortive M&A cost and 800,000 of cost to restructure the business towards the end of the year to focus on the core businesses and organic growth. This will result in ongoing annual savings of 1.2 million from 2023. Finance expenses are up by 0.6 million from 2021 to 2022. And this reflects both an increase in the average loan balance, which was up by 4.75 million, and a 2% increase in the effective interest rate from 2.3% in FY21 to 4.3% in FY22. This then gave rise to a profit before tax increase by 4 million, from 5.7 million to 9.7 million. Tax as a percentage of PBT reduced year on year from 23% in 2021 down to 20% in 2022, giving a profit from continuing operations up by 3.4 million, from 4.4 million in 2021 to 7.8 million in 2022. As John's already described in the highlights, Lionfish incurred after-tax losses of 4 million in 2022, leaving us with retained profits for the year of 3.8 million for 2022, compared to retained earnings of 7.3 million in 2021. If we look then at the balance sheet, you can see that overall the net asset value has increased by 0.6 million, from 60.8 million in 2021 to 61.4 million at the end of 2022. And I'm going to talk about the movements on cash and loan balances on the next slide. I'm not going to talk through every line, but I'm going to pick out for you some of the balances which have shown significant year-on-year movements. Trade and other receivables, you can see, has increased from 19.3 million at the 31st of December 2021 to 26.9 million at the 31st of December 2022, an increase of 7.6 million. In fact, trade debtors and prepayments were broadly unchanged, but the increase of 7.6 million was a result of increases in two balances, one of which was an increase in contract assets of 3.7 million to 9.7 million. Contract assets are more commonly known across the business as work in progress. And of this increase, 2 million reflected an work in progress relating to a significant client, which was then billed in January 2023. The other increase, which has resulted in a 7.6 million increase in trade debtors, was an internal accounting entry increase, in that it reflects an increase in the intercompany balance between the PLC and Lionfish, the discontinued operation. And so on the balance sheet, you will see an increase in trade and other receivables of 4 million, and a corresponding increase in the liabilities held for sale discontinued operations, which has increased from 2.1 million in 2021 to 6.4 million in 2022. Moving then on to the cash flow bridge for the year ended 31st December 2022. This slide, as you can see, highlights two key messages. First of all, that the business is highly cash generative, and it also highlights the rationale behind the decision to divest of Lionfish, which was taken during 2022. You can see that we started with opening cash of 4.8 million, generated operating cash flows of 13.1 million, paid tax at 0.6 million, drew down on our RCF to the tune of 5 million, whilst repaying our term loan, which was taken out to fund the acquisition of Memory Crystal, by 2 million. We invested 7.8 million in litigation investments during the year, of which 5 million related to Lionfish. We paid the final deferred consideration payment on the Memory Crystal acquisition of 2.2 million, paid rent of 2.5 million, and paid 5 pence per share in dividends, 3 pence relating to the final interim dividend for 2021, and 2 pence of an interim dividend in relation to 2022, which totalled 4.7 million, leaving us with closing cash of £3 million. John's now going to describe in more detail our businesses.
Thank you very much, Suzanne. When I think back over the last 15 months, I don't believe any of us really would have expected to see a war in Eastern Europe, inflation north of 10%, and interest rates that are nudging 5%. And what we've found during that time is the ways our clients have requested that we interact with them, respond to them, and service them has very much changed. And I think one of the things that we've had to work hardest at, and one of the things that's pleased me the most over the past 12 or 15, maybe even 18 months, has really been the success that we've had in doing that. So going back to the core businesses that we have, and a little bit more flesh on the bones around that. In terms of RBG Legal Services, Rosenblatt and Memory Crystal are now housed together here under one roof in Fleet Street. As I said already, Rosenblatt is predominantly contentious, and you can see on the left-hand side there, we're justifiably proud of the work that the team there did in terms of getting ranked Tier 1 in Legal 500 for commercial litigation. Memory Crystal, despite the fact that I rather crudely described it as being split between real estate and corporate, has many more subdivisions within that, such as banking or tax or CIPT or real estate litigation, real estate construction, real estate private client, to name but a few. And that really makes us what I believe is a full service law firm. Memory Crystal were also ranked in 15 separate categories in the Legal 500 during 2022. The end of that year, at the end of 2022, as you can see underneath those circles, we had 179 people in the business, of which 120 were fee earners. They are a ratio, or that's a ratio of fee earners or productives versus operational or business support staff and management that we very much obsess about. Currently, as of today, 176 people and 121 of those are fee earners. And the reason that those two circles overlap is very much to make the point that these businesses are so much stronger together. If you look at where the revenue came from in 2022, you can see that just under 40% came from disputes, 37.5% came from corporate, and 22.6% came from real estate. And when we look back at 2022, despite events in Ukraine in late February, corporate had a very, very, very strong first half of the year. It was almost a bit like an oil tanker that wouldn't slow down. And it really didn't tail off in terms of market sentiment and the like until probably well into May. Disputes was probably almost completely the reverse of that. It was quieter than we would have liked during the first half of 2022, but was quite frankly incredibly busy for the second half, especially from sort of September through to Christmas. And then it's not really fair to refer to it as sort of steady, but month on month on month, during those 12 months, real estate was pretty much doing its number. And the reason I highlight that fact is if those businesses were still separate, there will be far more in terms of peaks and troughs, both in terms of revenue and in terms of EBIT.
If we look then at how the financial performance of our legal services business stacks up against our peer group, as a management team, we focus on a small number of key metrics and processes on a daily basis, which drive improved financial performance. We were very pleased to see that in 2022, our revenue per fee earner increased to its highest level ever of 436,000, which was up 26% from the 347,000 in FY21. And you can see on the chart that this is also higher than the average that's been achieved by the top 100 law firms in every year up to 2021. 2022's figures are not yet available. One of the metrics that we look at on a weekly basis is fee earner utilisation. And you can see on the chart that we achieved an average of 76% in 2022. Unfortunately, we've not able to find any peer data to compare this against. Lockup, which measures the average number of days from work being performed to cash flowing into the business, is obviously key. Our lockup days at year end had increased by 28 days from the lock-up at the end of 2021. This, however, was impacted by 2 million of work in progress on the substantial client that I discussed earlier, which was billed and then subsequently collected in Q1 of 2023. Despite this increase in our lock-up days, you can see from the chart that our lock-up days were still lower than that of our peer group. Looking at the final chart, EBITDA is the result of all our strong commercial focus, and you can see that at 36%, this is almost double that of our listed peer group.
Moving out of London and up to Manchester and Convex Capital. The reason for putting that slide up is to highlight the fact that when we read sentiment in the press currently, it's very much around UK with its somewhat depressed currency and the fact that the UK is for sale. And in Convex, we're certainly seeing that, over half inflowing into the UK. Convex is a boutique sell-side M&A advisory business up in Manchester. We complete 90% of the deals that we sign up. You can see there 55% from money overseas and 88% of those are trade to trade. The USP really for Convex is we use a sophisticated suite of software that looks at specific sectors and draws Companies House and other forums for data and projects where we're going to see growth in ideally first or second generation entrepreneurial firms with a bit of a sweet spot for EBITDA. The fees are 100% contingent, which means the alignment completely with the client and Convex themselves. We've got a good track record, over 2 billion in the last 11 years. There's 14 people, there's 13 people now up in Manchester, of which 12 are fee earners. We've currently got a pipeline of 24 deals, and a number of those are very advanced in terms of the stages of negotiation. If we look a bit more at the pipeline, you can see a fairly good spread across technology, retail, online industrial healthcare. If there's one of those that we're not actively pursuing at the moment, it's probably the retail, so business to retail or business to consumer. We found sentiment lacking more than, say, business to business. So in terms of an outlook, I, Suzanne, Nick, Tanya, and the rest of the board are very optimistic about 2023 and beyond. And we have a very much a renewed focus around the core businesses and driving organic growth. Previously, there was an oft-stated aim around acquisitions, around mergers, and around growing through acquisitions. And you can see the success some of this has had when you think back a few slides where we showed revenue and EBITDA going up. However, right now, as of this morning, we had a share price of around 45p. And at 45p, it is not sensible, realistic, or otherwise to consider anything in terms of acquisition. So it's very much a focus on what we have here and what we have now. If there's one thing I'd like to achieve in 2023, it would be to restore shareholder value. It would be to restore that shareholder confidence. If we do that successfully, other opportunities will present themselves. Now, prior to being the CEO, I was the COO of both the legal services department and then latterly the whole group. And people used to say, what is the strategy, John? What do we stand for? What is it all about? In terms of Memory Crystal and in terms of Rosenblatt, I summarise that and rather jokingly say to people, I would like to run out of space in Fleet Street. Now, the two businesses, the two firms, Rosenblatt and Memory Crystal, now sit under one roof here in Fleet Street. We probably have 25 or 30 desks that we could fill. We have 3 floors here. I'd like, as I say, to run out of space. What that means is I have another 25 or 30 people, of which the ratios you've seen already, the majority or the vast majority would be fee earning or revenue generating. In terms of Convex Capital, Convex already came into 2023 with a very detailed plan. Convex is largely split between what we call deal origination and deal progression. Deal origination is more of a selling role, it's more of a client relationship role. Deal progression is more of a due diligence or commonly done by people with accountancy qualifications. We initially said we would look to recruit additional resource in deal origination. That's been done, the person has started. Then 2-3 months later, as deals start to progress, we would like an extra person in deal progression. That person, I believe, starts with us either next month or in June. And if we can do that, if we drive that organic growth, if we drive that increase in revenue, if we continue to manage this business in the way that we do around focusing on the metrics that Suzanne has just mentioned, then we will see that improvement in sentiment and we will see that improvement in both confidence and in value. That there potentially gives us the opportunity to assess any M&A to support ambitions in those areas. The final piece of that jigsaw is divesting or selling of Lionfish. The decision was made by the board last year to sell Lionfish. We received 4 offers. I can't say too much because it might prejudice things. One of those offers we are in advanced due diligence with. The most important thing for this forum and this presentation is to mention 2 things. Firstly, it will result in a significant cash inflow into the business. And secondly, it removes any risk in terms of cash outflow on litigation matters. Underpinning all that is our people and our management. In the last 4 to 6 months, we've done a huge amount of investment in time in terms of building and growing the collaborative culture that we have. There's been a change to the senior management, and you've heard already around what that will look like. We've reduced central overheads. That will save over £1 million a year. One of the statistics that makes me the most proud around RBGLS, when I think about the legal services practice, is that from 176 people, over 50 of them are permanent sitting members of our ED&I committee. And the environmental, social and governance piece is a huge focus of ours throughout 2022 into 2023 and beyond. To give you a few ideas, we send 0 waste from our offices to landfill, and we're carbon neutral here in our offices in Fleet Street. Around the social side, we engage with a charity of the year called Keen, which is a London charity looking after very underprivileged and disadvantaged youngsters in and around London. It's a safe place where parents can leave their kids at the weekends, on Saturday, Sunday mornings, etc. We partnered with Beyond the Bow at Christmas to deliver Christmas presents, and we support the Sutton Trust, which brings, I think, around 16 or 18 students into our business for a couple of weeks every year. Sutton Trust being a social mobility charity, giving opportunities to kids and teenagers from underprivileged backgrounds. They're things we're very proud of, and actually, when we do research and when we do staff surveys, they're the things that get far and away the most investment and engagement from our staff, probably cost us actually the least in terms of pound notes. And that investing in employees is absolutely key for us over the coming 6, 9, 12 months and beyond, because as everybody knows, happy employees are engaged and are fundamentally more profitable. So, in summary, we had a good 2022. Despite challenges, we did deliver solid profits. We're pleased with that, and we want to grow from that platform. We look forward to the year ahead, myself, Suzanne, Nick, Tanya, the entire board, with optimism, with that renewed focus on that core business and that organic growth that we will drive for the rest of this year and beyond. So that's it from myself and Suzanne. Hopefully you found it informative. Thank you very much for listening. And now over to Paul, who's going to compare some Q&A.
Fantastic, John, Suzanne, thank you very much indeed for the presentation. Ladies and gentlemen, do continue to submit your questions using the Q&A tab situated in the top right-hand corner of your screen. But just while the team take a few moments to review those questions submitted today, I'd like to remind you the recording of the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. John, Suzanne, as you can see, we've had a number of questions, both pre-submitted and throughout today's presentation. If I may, I'll start with the first one. It reads as follows: will the dividend policy continue as it's been, or will there be changes going forward? If there are to be changes, what will they be?
I can answer that one. No, the dividend policy will remain as is, as I said in the presentation, 60% of retained earnings. We intend to continue along that path.
Fantastic, thank you indeed, John. Second one we've got here, Nicola Falston, the ex-CEO, is the third biggest shareholder. Does this concern the board, and should it concern shareholders?
I'll take that one then, John.
Okay.
I don't think so, because obviously, as a large shareholder, I would envisage that she would, in the first place, probably approach our company broker, and that would want the shares to be sold in an orderly manner. We haven't had any indication that that is the case. The other thing to note is that it's actually her trust who actually hold the shares, and obviously the trustees there will have a fiduciary duty to the beneficiaries of the trust. And so that's something to note on that front as well.
Yeah.
Fantastic, thank you. The next question we have here is, please outline your perception of staff morale now compared to 6 months ago.
I'd like to think it's better. I would say that, wouldn't I? I'm the CEO, and it's important that it's better. We did a staff survey last June. We did another staff survey last month. And yes, it is better. We're investing a lot, as I said already, towards the end of my slides. And the feedback that we have from some of the initiatives that we've done, anything from, we have a regular Thirsty Thursday, which is a social drinks event on the last Thursday of every month, where people can sort of, get together around our hub days that we've introduced as part of our ongoing and evolving hybrid working policy. The events, the pub quizzes, the summer events, all of that kind of stuff that, as I already alluded to, doesn't actually cost fortunes in terms of pound notes, but gets a huge amount of buy-in. I think a lot of businesses, and we are no different to this, post-COVID, struggles a little bit with its culture in terms of how can you build and grow and engender a culture when a lot of people are sort of disparate and working from offices or bedrooms or kitchen tables and the like. And therefore a lot of that is around the communication piece that we do that is more than just what we can do here in this office. So I believe, and from what I'm seeing in terms of survey results, I would say it is better.
That's great, thank you very much indeed. Please give an update on the number of partners now compared with the number of partners on the 30th of September 2022. In other words, how many have left and how many have joined? What's the net difference?
It's almost identical. Yes, we've had some leave. Yes, we've had some start. 5, I believe. 5 in and 5 out. So it's depending on it. For example, I think one partner leaves this Friday. We have another partner starting, so in the next month or so. So within the exact dates, it's pretty much identical, Paul.
Thank you very much indeed. Could you please provide an update on what's happened to the EIP that was proposed for executive directors and the growth share schemes that were to be introduced for the subsidiaries Convex Capital and RBGLS?
I'll take that one, John. No share options or shares were issued under the EIP. And similarly, although we've investigated the growth share schemes for RBGLS and Convex, to date, no shares have been issued or options have been issued under those schemes. We are currently reviewing the shares ownership piece. With a view, because obviously we would like to align the employees with the investor base.
If I can just add over the top of that, Paul, we've sort of had this discussion internally around a traditional LLP. Quite often offers what they refer to as equity, and we've always found that as something of a misnomer because, of course, there is no equity. There is what's fundamentally a profit share. One of the advantages that we have as a PLC and a listed company is that we can offer genuine equity, and the piece that Suzanne alludes to is we have an employee benefit trust. It holds shares, And we're looking to find an attractive way of using those shares as incentives and rewards and bonuses and the like for staff.
That's fantastic, John. That kind of cuts into the next question, which I think you've part answered there, is what new incentives / pay increases may be needed to retain staff? Obviously, we've talked about the equity component there. I don't know if there's anything further to add at all.
Just that we benchmark ourselves in terms of salaries, bonuses, all remuneration, be it healthcare, etc. We do that every year. We benchmark it and we pay an appropriate market rate that allows us to, attract and retain good, top, talented individuals. But going back to that ESG piece, it is interesting and it needs to be commented upon here. That yes, people are focused on their paycheck and people are focused on what their options are in terms of bonuses or shares and what they earn. But they also need, and we're seeing that increasingly, a clear alignment between their own philosophical beliefs and those of the business that they work for.
That's great. Thank you very much indeed. Next one here, I think we've covered some of this off, but it says, please outline the board's attitude to dividend payments and why the continued payment of dividends is justified with the level of debt on the balance sheet at the relative tightness against available facilities. And I know you've covered off that payout ratio, but if there's anything to add on the debt side.
Yeah, so on the debt side, obviously you've seen from the slides which I presented, the business is a growing business, it's very profitable and cash generative. And we've got a clear plan for growth and reducing our level of debt and a good relationship with our banks.
That's perfect. Thank you, Suzanne. What have we got here? Please give an update on the prospects of Convex Capital now that the founders have stepped aside, and if it's more difficult, if at all, to persuade potential vendors to sell in a rising interest rate environment and therefore one of subdued selling prices.
Yeah, I can take that. Mike Driver, who was MD at Convex, remains a consultant, and there's been a very sort of long-standing and detailed plan for succession planning within Convex. There are 3 of the younger team who now manage Convex on a day-to-day basis: James Edge, Isaac Azamar, and Tom Campbell. And it's important to remember that all 3 of those guys have been in that business for a considerable period of time, many, many years. In fact, I actually think that James Edge was in Convex before Mike Driver started there. So there's a huge wealth of knowledge and experience in terms of the management team, and it's our job as the wider board to support them. In terms of the market and market sentiment, and the fact that obviously if people are buying other businesses, potentially there's the debt element, and will the interest rates affect that debt element? What we're seeing actually is that the pipeline for Convex is very, very good, and we've been signing up deals in the last few weeks and months. But the fact that quite often, as I put on the slide with a sort of map of the world, the fact that a lot of the money is inflowing from overseas, and the fact that the money is generally offering trade-to-trade acquisition, we don't see that necessarily affecting the price, and the prices that we're negotiating and seeing, and subsequently the fees are holding up as we'd like to see.
Thanks, John. A question here just around the strategy and attitude towards litigation funding. Where is that now?
Obviously, in terms of litigation funding through a separate business, we are divesting Lionfish. We will be selling it. In terms of timing, I think, as I said already, we'd like to be updating people that is a done and dusted transaction, certainly by the time we come to the market with our half-year numbers. As with all law firms, it's part of day-to-day where there's potentially conditional fee arrangements in place, and we have a few of those, and we continue to work with them.
I guess an extension of that, John, if I may, here is I've got a question just saying, if the company had substantial cash reserve, would you actually want to keep Lionfish? I know the board's made the decision to take that away. Has the strategic rationale for that Lionfish changed significantly? Obviously it has, as you're divesting, but if there's anything to add around that.
No, not really, I don't think.
I mean, I think the thing that, as we set out in the annual report, is that the the board considered the size of business and balance sheet and the number of cases, therefore, that you would need to hold in order to minimise the risk involved in any particular investment. And so obviously what you'd want to do is to be, having, 100 deals so that, if one case, for example, wasn't successful, that the risk is of that particular case minimised, and looking at the size of business that would be required in order to minimise the risk. RBG at the moment doesn't have the balance sheet in order to support that size of growth. And so that was the rationale behind the decision making of divesting the business.
That's great. Thank you, Suzanne. What's the company's 5-year plans concerning its AIM listing?
The 5-year plan is that we continue. We're still very new into our journey on AIM, and we listed with Rosenblatt in 2018, and it's allowed considerable acquisitions that have grown the group. And despite challenges over the past year with Lionfish, we very much see ourselves continuing.
Fantastic, thank you, John. Please could you confirm what the full year 22 800,000 restructuring costs related to? Could you also quantify any exceptional restructuring costs in the current year in relation to the senior management changes?
Sorry, could you repeat that, please, Paul?
Absolutely, John. So please could you confirm what the full year 22 800,000 restructuring costs related to? Please could you also quantify any exceptional or restructuring costs in the current year in relation to the senior management changes?
Okay, so the restructuring charges from 2022, as I mentioned when I presented the slide, related to basically focusing our business back to the core business and basically taking out central overheads. So previously we were working on a model which had a group structure to a certain extent, but with refocusing back onto the core businesses, that's enabled us to in effect take out. If I give you an example from the finance department, you'll be aware that Robert was the CFO. I then worked as the group financial controller. We had a group reporting manager and then an FD of the law business. And that's been now stripped down to a group finance director and a group financial controller who was looking after the whole group. So you can see that we've basically taken out 2 senior finance heads out of the finance department. And so, in effect, that was a process and a review that took place across the whole business to basically strip out central overheads and consolidate the business back down to the legal and professional services businesses.
Yeah.
That's great. Thanks for the example. That's very helpful. Just got a question around WIP. Do you have a KPI target for WIP and the controls you have in this space?
KPI, do you mean in terms of a ratio versus turnover, or a sort of lock-up days in terms of it coming to cash?
It's not specific, John, but perhaps if you look at in lock-up days and that ratio, if you've got both angles there, we could cover those off. I know in the slide, I think you had lock-up days, so perhaps if that's an area of focus, we can comment on that.
Yes, and as I said, when we looked at the lock-up days, our total number of lock-up days at 2022 was 137. And as we showed on the slide, that was better than our peer group. Obviously, we're always looking to try and reduce that because that basically means that cash is coming into the business quicker. And so we do have a focus. We have a very clear focus on controlling WIP. We have monthly WIP reviews and look at the recoverability of the WIP. There's a process for the write-off of WIP to make sure that we're obviously getting the profitability out of the business that we can. And so we do look at WIP and billing the WIP as soon as we possibly can to reduce our lock-up days, and collections from our clients is one of the key daily focuses.
And I think also to add, in terms of at the front end, really before we actually get to recording time, which obviously becomes WIP, We sort of run very much a sort of commercial footing within our legal services businesses. There are processes and procedures around how we price. There are processes and procedures around the ability to record WIP, the ability to record WIP, that's not necessarily with money on account. That's all very tightly locked down. So the idea being that obviously that avoids scenarios that are all too common in law firms where people burn time, they rack up funds or they rack up costs, and then the client says, I didn't agree to this, and it ends up being written off. So we're very focused on, can we monthly bill or money client account, or all of that sort of fundamentally good fiscal control.
Fantastic, thank you. For Convex, you mentioned 6 completions in 22 suppressed by markets. Has there been any transactions so far completed in 23?
No, not yet. No. It has been lumpy. It has been some stuff was deferred from 2022 into 2023. We believe the first deal is going to complete at the beginning of May.
Brilliant, thanks, John. If the share price wasn't a constraint at the moment, what type of acquisitions would you like to make?
That would obviously be a wider decision for more than just myself and Suzanne, but across the board. But I think it would come back to elements that I highlighted in the slides, which is very much around additional supportive sort of bolt-on for our legal, the core business that we have here in Fleet Street in terms of our legal services. I don't think I mentioned that we have a new banking team that's starting. We have additional areas that we're under offer with around some insolvency, some restructuring work. We've had another disputes partner start, another real estate partner start. But the areas that, if anything, flesh out what is already a full service law firm to being able to do almost anything under one roof. So I think that would probably be more niche areas of the law, if you like.
And just a follow-on question, really, a bit of an extension of that. The legal service business has been very good for RBG. You stated the current price we've just discussed, that acquisitions are impossible. Where does that share price have to rise to bring that back on your radar?
I think I've actually come across a question I'm not able to answer really there, Paul. At any point in time, it would depend on all of the vagaries of the deal that was possible. Because, as you say, at 45p, we have a market capital value of around about 40 million pounds. And you'd end up with dilution that was too great and unsavoury for shareholders to acquire anything significant. I mean, it's going to have to go up clearly, but where that number up has to be, I couldn't comment.
That's great. Thank you very much indeed. I think we've got time just for a couple more questions, actually. So as the CEO and Chief Capital Allocator, how do you prioritise debt repayments, dividends, share buybacks and reinvestment in organic growth? What factors will you consider when allocating capital?
Okay, I'm going to need, I think there were 3 questions there. Can I have that one again, please, Paul?
Yeah, absolutely. I'll break them down for you. As the CEO and Capital Allocator, how do you prioritise debt repayments, dividends, share buybacks and reinvestment in the organic growth of the business when you consider, and what are the factors when you consider allocating capital to these different areas?
Okay, well, organic growth, I would like to think would be self-funding, because ideally we're employing additional, fee earning and partner, which is revenue generating lawyers. So I would like to think that would actually add capital, add revenue and add profit to our business. In terms of the split between debt repayment and dividend, we have an excellent relationship with our bank, and we're comfortable with our debt and we're comfortable with the plan to repay our debt. So going back to our dividend policy, it's largely unchanged. We still believe that we have enough cash within the generation. You saw the cash flow slide that Suzanne ran us through in great detail. These are cash generative businesses, and we can both pay down our debt and pay a dividend.
That's great. I think we've got time for one final question we've got here is, how do you value your private investors? Will you continue the previous CEO's efforts to engage and promote the business other than around results day?
We value all investors. We value all investors. I've had in my limited time correspondence with private investors. It's not all about our institutional investors. If 150 people all turn up and want a meeting at once, it is always going to be difficult. But we value all our shareholders, and wherever possible, we will engage, and we will either engage by email, by phone conversation. We'll do whatever the time allows.
That's fantastic. Look, thank you. I think you've addressed those questions you can from investors just as we're coming up to time as well. And of course, the company review all questions submitted today, and we'll publish responses on the Investor Meet Company platform. John, just before redirecting investors to provide you with their feedback, which I know is particularly important to you and the company, can I just ask you for a few closing comments, please?
Okay, well, thank you, Paul. Firstly, thank you to everyone for their time, for dialing in to listen to our story for 2022 and the future in terms of 2023. If there are any key messages that I would sort of like to double down on, I think it would be around the success in terms of the growth. This is a business that's still 3 times the size it was at IPO. It paid out a strong dividend despite some challenges in terms of lionfish. They're proven businesses. They have survived, many challenges over the previous 2-3 years in terms of COVID or economic challenges recently. They date back to 1989 and 1978, Convex a bit later. It's got an experienced leadership team, and whilst it might be new in the actual roles we have years and years and years of experience both running external businesses and running legal and professional services businesses. I think, I'd like to say, you'd have to ask them. We have a happy group of employees downstairs and up in Manchester working away. And we've got a very good vision. We know where we're going. We know what we want to do, both in the short and the medium term. So finally, thank you very much, everyone, for tuning in. And that's it from us.
That's fantastic, John, Suzanne. Thank you very much indeed for updating investors today. Can I please ask investors not to close this session, as you'll be automatically redirected to provide your feedback in order the team can better understand your views and expectations. This will only take a few moments to complete and is greatly valued by the company. On behalf of the management team of RBG Holdings PLC, I'd like to thank you for attending today's presentation. That concludes today's session, and good morning to you all.